Supervising Environmental Specialist with the Environmental Management Department of Environmental Health Department of Sacramento County. And then we have James Barrett, who's from CDTFA, so California Department of Tax and Fee Administration. And we have Judy Fletcher, who is our Chief Lending Officer at California Capital. And so next up we have Mark, so I don't want to cut into your time. So with that, Mark, I will hand you the floor.
All right, thank you very much, Sarah. So I'm going to pull up the PowerPoint and hopefully share the screen. Give me 1 second. I think I'm going to share the screen. Let's see. Can everybody see it?
Yes.
Okay, thank you. All right, so yeah, again, as Sarah said, I'm one of the supervisors, and hopefully everybody can hear me okay. I'm one of the supervisors in the Consumer Protection Program, and we oversee mainly the food program. So we inspect all the restaurants and bars and food facilities, community events, food trucks, caterers, and some of the other food program permits that I'm going to be covering, which are some of the smaller ones. But besides food, we also do all the recreational health, inspect swimming pools, body art, tattoo parlors, things like that. So lots of different programs, but food is our largest. So, all right. So, so today we're just going to talk about some small business startup opportunities, and I think that fits perfectly. I give this talk also with an Alchemist micro business program academy that they also have. So I think it'll fit well. So I'm going to cover some of the different small business options related to food, including temporary food facilities, which operate at events and festivals and fairs, which unfortunately we have very little of during COVID, but hopefully this summer or later this year, we'll be able to issue permits and inspect some of those. We also will cover food carts and food trucks, which I think we're all familiar with, and then catering operations and the cottage food program. So, and just real quick, Sarah, if there are questions, I'll maybe leave it up to you to check the chat. If that's how you want it to work, then that'll work for me.
Sure. Yep. We left about 10 minutes at the end.
Okay. All right. I talk fast, but we'll see how it goes. Okay. So the first one that we'll talk about are temporary food facilities. So if you've been to a fair, Chalk It Up Festival, anything, you know, the state fair, some of them come in different shapes and sizes, but typically for the smaller community events, it's a typical kind of a screened in food booth, as opposed to like a trailer or a food truck, which can also be at community events. But I'm mainly focusing on maybe the cheaper, quicker startup version of a food booth. So some of the pros are the cost, limited food equipment needs, and menu options. You can pretty much cook anything you want, as long as you have the proper equipment and that you're able to keep the food hot, keep the food cold, then you should be good to go during that event. Some of the cons, it's limited to community events. So you can't just set up a booth at the edge of a corner or, you know, just anywhere in your backyard or front yard or anywhere else. It has to be an actual permitted community event. Now you may see on weekends, especially, somebody may be barbecuing on the corner somewhere, but those are unpermitted. So they act and look like a little food booth, but it's not part of an event. So again, some of the cons is, you know, you have to put it up, you have to tear it down. The weather, you know, it can rain and that'll ruin ruin any community event, or high winds, but also, you know, heat and cold. But typically it gets hot during the summer, and that's when most of the events are. So that can always be an issue. And then you do I think most of the time you have to pay the coordinator either, the booth space, which, may not be that much, but some of the larger events, you also have to pay like a percentage of your intake of sales. So you just need to, work with the coordinator, find out ahead of time what that may be and see if it works out for you. So some of the equipment that you may need, screen booths, hand wash station, wash tubs, some tables, hot holding equipment, ice chests. You don't have to have refrigerators, but you would need something, ice chests and plenty of ice to keep the perishable food cold. And then any cooking equipment, whether, barbecue and fryers are typically outside of the tent, and some flat grills are outside of the tent as well. So most of the cooking is done outside, maybe if it's an electric rice cooker, that could be inside. But you'll also deal with, the fire department. They do lots of inspections at the events too. So they'll let you know what can and cannot be inside of the booth. So getting to the fees, just for the temporary food facility fee, it's $75 for low risk if you're just like doing hot dogs or prepackaged goods or, selling beverages. Or you would be up to the higher risk food if you're like barbecuing, cooking meats, anything like that. That would be $158 per event. And that's what the coordinator would pay us, because that's what we're charging the coordinator. And then the coordinator would pass that fee on to you. But we also have a multi-event permit, and 322 is for low risk foods and 483 are for high risk. And that permit is good for a full year. So if you plan on doing different events, I think once you get past your third one, you'll start saving money. So again, you pay an upfront fee and for the full year, and then you're good for the rest of the year for any community events that you choose to be a part of. So again, just kind of giving you an idea of what, a typical setup may be. You'll have some, have a hand wash station over here, and then in the middle, just something to wash, rinse, and sanitize your utensils. If you have tongs, you drop a couple tongs on the floor, you got to wash them. So we want to make sure you're able to properly sanitize them while you're at the booth. And there's another setup on the left side, just having soap, paper towels, some bleach. So it's really inexpensive. So you don't need a 3-compartment sink or anything that's really, heavy and lots of expense. So then moving on to food carts, which is the smaller of the mobile food business. They are limited to the type of menu since it's not a fully enclosed trailer or truck. So there's certain things that you can do: heat, fry, bake, roast, popcorn, shave ice, steam or boil hot dogs, and coffee drinks. So most of the food carts are, hot dog carts and coffee carts. Those are the typical ones. But we do have some like prepackaged burritos that get made at a commissary or food facility that get sold downtown. He's been there a long time, but a lot of, shaved ice carts during the summer. There's lots of ice cream trucks that, operate during the summer as well. But again, the only thing that's pretty much limiting you is your menu. You can't barbecue, or you can't, cook and hold the food on these carts. You can cook and serve or cook to order. But again, it does limit the menu. So you'll only see like certain types of food carts out there just because of the restrictions in the food code. But you can dispense non-potentially hazardous foods. That's the PHF, like popcorn, pretzels, prepackaged chips and candies. You can only hot hold hot dogs or sausages or tamales in the husk and roasted corn. So you must store the food inside food compartments. So I'll have a picture of that. So the application fees, they're not that expensive, $190 for like a category A, which would be for like an ice cream truck, or $381, that would be for like a hot dog cart. But definitely you want to talk to us before you decide to buy somebody's hot dog cart or any other cart that may have been permitted in another county or state, or if you decide to want to build one yourself. We can kind of give you some, free consultation and evaluate it, through pictures very easily if it'll meet most or all of the requirements for California. And so there's only one food code for all of California, but some counties interpret it differently or maybe a little bit more strict or less strict. So we try to be, just by the book. Some counties may say we're more strict, but other counties we have found can be a little bit more strict just based on how they interpret the code. So definitely always ask us first before you put down a good, chunk of money on a cart that you may end up not being able to use. So just want to make sure you understand that. So some of the requirements on the food carts, depending on, the food sales, but, it could require potentially a 3-compartment sink, or definitely a hand sink if there's any open food. So even like a shaved ice cart or a popcorn cart that you're popping popcorn and filling it up into little bags, will still need a hand wash sink. And then also food compartments and refrigeration, for any, like for hot dogs or other sausages. But one of the main thing for the food compartments is protection of the food. So all food carts must be stored and operated from an approved food facility or commissary. And I'll get into that a little bit more. So that's definitely something that you have to think of, because you can't store your cart at home, or you're not supposed to, definitely. So neither food or utensils as well. So all those are stored, washed, and any food prep would be done either on the cart or at the approved food facility. All right, so just some of the general, like the food with the carts, a hand wash sink, there's, certain size water tanks that are required, a minimum of 5 gallon of clean water to wash your hands, and then a 7.5 gallon minimum for the wastewater. And then if it's a larger, cart or trailer that may need wear wash, then it increases the size of the water tanks. So these are all things that we would look for and make sure ahead of time that you would be in compliance before you, again, spend money or start to build a cart yourself. All right, so now moving on to the larger mobile food facilities, food trucks. I think we're all familiar. This is not an actual truck. I do not have a taco or burrito truck, even though that could be fun, but I'll leave that up to other entrepreneurs like yourselves to take care of that. So the mobile food truck requirements, again, it is a mobile food facility, so it does need to operate from a commissary. The vehicle is stored and cleaned, washed out at the commissary. You dump your wastewater, fill it up with clean water. The wear wash sink and dumpster and bathroom, adequate storage for food and equipment is needed. So currently there's only 2 large food truck commissaries. There's one on Ties Court and there's one on Richards Boulevard. They can be filled at times and have a waiting list. So that's something you're gonna wanna think about ahead of time as well, to maybe get on the list if it is, if they are taking people. But it is, and definitely you wanna check out expenses for that. Could be anywhere from $500 to $800 a month. I'm not exactly sure what, is charged in, at those 2 facilities, but I know it does, play a large amount of the income that you may have to spend to operate your food facility. So some other requirements. So the food truck is basically, it's a restaurant on wheels. And it needs much of the same equipment, a 3-compartment sink, hand sink, hot and cold holding equipment, a ventilation hood over the cooking equipment, large holding tanks, refrigeration, And so when you have an enclosed food truck or food trailer, you can cook anything inside as long as you have the proper equipment and ventilation for the equipment. And you can do any prep. So I mean, you can cook hamburgers and, you know, French deep fry stuff, make sandwiches, salads, just about anything. And that's why I think we have a large variety of the gourmet food trucks and non-gourmet food trucks, you know. So again, it does give you lots of options because it is pretty much it's a restaurant on wheels. So currently the application and the permit fee is $670. So that's for a full calendar year. So if you come in at the beginning of the year, you get the full year. If you come in June, you're only going to get 6 months. We do start issuing the next year's permits mid-November. So you can get a 2022 permit if you come in like November 15th, if that's the time that we start issuing permits. So for the following year. So you get an extra month and a half. So, all right. So just typical inside. This appears to be definitely a custom made truck or trailer. It's all stainless steel. You know, commercial type cooking equipment, 3-compartment sink with drain boards, proper hand wash sink. And so the mobile food trucks, where can you sell? You can sell at community events with a mobile food truck permit in our county and most likely other counties. Then you don't have to pay an additional fee to be at a community event. You're already permitted, you're already inspected. So you wouldn't have to pay us to be at a community event. You can go to like flea markets, swap meets, certified farmers markets. There's lots of route trucks that go to businesses. They'll, you know, come in, they play their little music, and then, you know, customers come out for like 15, 20 minutes. They sell, and then they go to the next business and do the same thing. And then also you can be a stationary truck. You'll just want to make sure that you have access to electrical, or you may have a generator on board, and just to keep all your refrigeration running properly. They do have batteries on the trucks, but those tend to drain down. So lots of trucks have been including their own generators on the back or the front of the vehicle. And so also if you stay in one place for more than an hour, then you are required to have access to an approved restroom, a restroom that we would confirm that you have access to, so that's if you park in one spot for more than an hour. And then definitely you want to make sure that it's zoned, or that you're able to park in that area through planning and zoning. And I think they've gotten a little less restrictive with a law that passed a year or so ago regarding sidewalk sales. But it's always good to check with the planning and zoning department if it's a particular spot you want to try to sell from. Okay, catering operation. So caterer can do 2 types of food sales or operations. They can do contracted food sales, which would be like a wedding, a party, you know, catered luncheon, where you're bringing the food and setting it up, whether you may leave it there, or you may actually you know, have employees that would serve and clean up at the end of the event. So it is a predetermined amount of food. So you're not just going there and selling tacos or selling any other types of food. So the only time a caterer can sell food directly to a customer is at a host facility. So this law came into play with the boom in breweries and wineries, but mainly breweries, since breweries, they don't want to install kitchens and they don't want to get health permits with us. So they just do their beer manufacturing and beer sales and tastings, but they want their customers to stay there longer. So the state came up with a host facility permit where the brewery can become a host facility and then bring in a permitted caterer up to 4 hours in a 12-hour period to do direct sales to customers. So it is limited to 4 hours of sales. During COVID, we are kind of stretching that a little bit now. So we're not so hard on just saying, okay, 4 hours, that's it. So for them to be able to have outside, you know, beer tastings and beer sales, that they have to serve a meal. So we've kind of worked with them on that. But the food is prepared at the commissary and transported to the venue for service. You can do, you know, some limited food prep. I mean, you could barbecue and probably make sandwiches and things like that, but we want most of the food prep, cutting, dicing, slicing things done at the commissary, and then you're just kind of have very minimal food prep to do at the location. So catering operation, you operate again like some of the mobiles, you operate from a permitted food facility or commissary, and you store your equipment and utensils and food items at the commissary. Obtain a food manager certification, and the permit fee is $391, and that's good for a full year. And then kind of a lot of people say, what about pop-up? I want to do a pop-up tent and do some food sales, you know, at a particular store or at a particular bar or other place that doesn't have any food sales. Again, the only way to do that is if you're a permitted caterer, it would have to be a permitted host facility. So that business would need to go through the process, and it's a really easy for them to get a host facility permit. There's minimal requirements, restrooms, solid waste, liquid waste disposal. So, and but there is a fee for that. I think it's $365 if they're not a food facility, like a bar that doesn't have a kitchen, could become a host facility and bring in a caterer for 4 hours, and their fee is only like $73, and it's a one-time fee just because we already inspect them as a bar. So not to confuse anybody, but just wanted to mention that. And the last but not least is a cottage food operation. So as a CFO, you're allowed to operate out of the registered area of a private home, the kitchen. Food items are limited to non-potentially hazardous foods, mostly baked goods. Direct sales to the customer at the home, or you can deliver, but you can't have Uber or DoorDash or a third-party service deliver your cottage food products. You can even wholesale to a retail facility as a cottage food. There's a A and a B in our county. So an A would just be you're doing direct sales to the customer, but a B, you could sell your product to a store like Rayleigh's, and then they would sell it to the customer. So you would be kind of a wholesaler at that point. So there's two different permits, but registration, but just different fees, and you get inspected as a B. An A is just kind of an online evaluation of your application. So currently, here's the fees for the Class A, $268, and it's a one-time. I'm not sure if it's still a one-time fee. Sorry if that may be possibly old language, but definitely for Class B, it's $421, and that's an annual fee. And I think, okay, this is just some general products that can be done, baked goods without creams or custards, you know, candies are common, such as brittle toffee, chocolate covered, non-perishable foods. You can kind of go through this: fruit pies, fruit empanadas, and fruit tamales, herb blends. And this list is designated by the state. We do not have any, we can't add anything or take away anything from it. So we don't approve what's on the list. It's all through the State Department of Public Health. So we do our best to interpret what their list is and how we apply it to, because you can call one thing, you know, a macaroon, and somebody else calls it something else different. So our staff, we have 3 staff that do the cottage food program, and they do their best. But some of the things that you may think could be done may not be allowed, and so then you might have to become a caterer to make that. So instead of a cottage food, so instead of making it out of your home, you would have to go to a permitted food facility. All right, I think we have a little bit of time left, so I can take questions. Sarah, if you want to read them, or I can close this, stop share, maybe.
Yeah, so there's a lot of questions, and we definitely probably won't have time to get to all of them, even at the end of the presentation where we save time for Q&A. So we were thinking about collecting them all and answering the ones that came up repetitively in a separate document offline and emailing out to individuals. And Sue, I'm not sure if you want to chime in, but I just want to be respectful to everyone and all of our presenters that have agreed to present with us today, and just make sure they have enough time. And there's a lot of really good questions that came in the Q&A and the chat, but we won't be able to get to all of them. So Sue, I'm not sure if you wanted to chime in on that. We do have 5 extra minutes in Mark's segment of presentation.
We can either ask some of the questions or leave all the questions to the end and let the other presenters go ahead and present. And then for those of you who raise your hand, if you could post your question in the chat box, that way we can capture it and answer accordingly. Would that work, Sarah?
Yeah, that works. So we're just going to move on to the next presenter, which is James Barrett with CDTFA. And we will answer as many Q&A or questions at the end that we can with the time left over. And if not, we're going to compile all of the questions from all 3 presenters and distribute them to those on the call with us. So thank you so much for understanding, but there is many, many, many good questions regarding food trucks and food-based business in your presentation. So James, I will hand the floor over to you.
Hi, everyone. Can you all hear me just fine? I hope so. And you can see my presentation on the screen. So I'm going to talk to you guys about food industry and sales taxes. So first up is we have this website here, cdtfa.ca.gov/email. You're going to want to send them some of your more complicated questions. A lot of sales tax can be contextual. It's how you operate your business, buy your items, ship them, advertise them. That's all going to determine taxability. So what I'm covering today is very general, but if you have questions about how it specifically applies to you, if you send your email to this website here, cdtfa.ca.gov/email, we will send you written tax advice, okay?
James, there was a question, if you could perhaps make it full screen, your presentation.
That's it? Oop. Nope. All right. Let's see here. How's that?
Perfect. Thank you.
Okay. All right. So we're going to start at the top. This is what is sales tax? So generally all sales are taxable unless specifically exempted or excluded by law. A sale is a transfer of title or possession of property for a consideration. So anytime you're trading something or selling something that has value, a tangible item, it's a sale, and sales tax is going to go along with that in California. Sales tax is imposed upon you, the retailer, on the sale of tangible personal property. You guys know that you can collect reimbursement for the sales tax from your customers, but the reason I go out and talk to people is it is your tax to pay whether or not you collect it from your customer and whether or not you collect it correctly from your customer. In both of those situations, there's going to be a discrepancy that's going to come out of your pocket. We don't want that. You guys are going to work too hard to be paying out of pocket. We want you to collect from your customers, store your money in a hard to reach bank account, and then dump it out when it's time to file your taxes, okay? So that's important to understand. Along with sales tax, we have something called use tax. Now, this is meant to close maybe a few loopholes that exist in the sales tax law. You know, if California charges, 7.25% baseline sales tax, why not go to Oregon and buy everything there where they have no sales tax? Okay, so if you can get a better deal for your item in Oregon, please do, but it shouldn't be because of the sales tax. We don't want sales tax to be an impediment to business. So that's why we have use tax. If you buy an item out of state or online without paying sales tax, or out of country without paying sales tax, you're obligated to report it as a purchase subject to use tax, which is basically just the same rate as if you had gone down the street and bought it from the guy on the corner. All right, so I'm in Sacramento, it's 8.75%. If I buy an item from Oregon to use at my business, I need to declare it at an 8.75% rate for use tax. So we're not talking inventory. We'll cover inventory in a bit, but if you buy inventory items without paying sales tax, you just sit on it until you sell it. This is if you buy uniforms, office supplies, toilet paper, machinery or equipment for your restaurants, those sort of things that you're using as the end consumer, you declare those for use tax. The other situation that comes up with use tax is if you take an item out of inventory. You can purchase items for inventory without paying sales tax. If you take an item out of inventory and use it, you need to report use tax on that as well, because the argument is you should have paid sales tax at the time you bought it. So those are the two situations. This slide here over on the left, you can see the tax imposed on the retail selling price for sales tax, and it's the responsibility of the seller. For use tax, it's imposed on the purchase price or cost, so not your markup necessarily if you took it out of inventory. And then it typically applies to purchases from out-of-state vendors as well. If the property is purchased with a resale certificate and is not resold, then it's imposed on the purchase of the equipment, the consumable supplies, or items purchased for personal use. And again, it's the same tax rate. When you guys are filling out your sales tax return with the CDTFA, the line 1 is going to be total gross sales. Line 2 is going to be any purchases subject to use tax. That does apply if any of you are running bars and you want to give a free shot if it's your birthday, something like that. Those are going to be, you're going to need to keep track of those. Comped drinks can be a use tax obligation, okay? Free food can be a use tax obligation. So just keep those in mind as you're going. The other thing with sales tax that's going to impact you, especially going off of the first presentation, if you're doing fairs or mobile food trucks, is you're going to have to be aware of district taxes. So the way it works is sales tax in California is 7.25%. That's the baseline. You're not going to legally pay less than 7.25%. In addition to that, we have what are called district taxes, and these are the taxes that you guys, the voters, approved. Or maybe you didn't approve it, but the Brady Bunch bubble to your left is the one that approved it. Somebody voted for it, and that's why we have higher tax rates throughout California. So Sacramento is 8.75%. The county of Sacramento, but not the city of Sacramento, is 7.75. These are all determined by voters. So on this slide here is the website at the bottom, takes you to our tax and fee rates page, which is going to look like this here, okay? And you can type in your city, you can type in your county and look for it, but I will caution you using this tool. This is very general. I have seen situations where the mailing address may say Sacramento, but they're in the unincorporated part. So what's even more useful is on this page, you can see the blue link that says, look up the current sales and use tax rate by address, all right? If you click on that, it's gonna bring you to this. This is the district tax lookup. You have a little Google Maps type input. You can drop in the address where you will be having your mobile food truck, or the event where you'll be having your food stand, or even your brick and mortar location. And you can see here it drops a orange flag telling you the exact tax rate that you're going to charge at that location. This is also useful because you can see it gives you a gray outline. Anything in that gray outline is going to be the same tax rate, okay? So that's useful if you're a business that's going to be doing delivery, all right? If I go back a little bit, the way district taxes apply is if you have a location, obviously a brick and mortar location, that's the rate you're going to charge. Customer comes in there, buys from you, they pay that tax rate at your location. That one's not confusing. Where it gets a little more tricky is with delivery. So if you deliver in your own car or vehicle, or a vehicle exclusive to your company, then you are subject to the district tax where you drop it off. So in this situation, if you're a caterer in Sacramento and you go to Tahoe to cater a wedding, you're going to be needing to collect sales tax at the Tahoe rate because you are physically delivering food there. Or the third box here, you have staff physically in that area, all right? So like I mentioned, if you come here to this page, click the blue look up the current sales and use tax rate by address link. That's going to give you the ability to look and see where the borders are and exactly what tax rate you need to charge. Okay, so that's real important. I had mentioned inventory purchases. You can buy items for inventory without paying sales tax, okay? What you're doing is you're making a promise. You're saying, I'm not paying sales tax now, I'll pay it when I sell it to my customer, all right? And the way you document that promise is with a resale certificate, okay? Resale certificates are valid if they are taken timely and in good faith. So timely means at the point of sale with your vendor, you're gonna wanna give it to them right away. Once they have it on file, you don't have to give them a new one each time. They can just keep it on file for you. And it needs to be taken in good faith, which means it has to pass the smell test. So if we go forward, one more slide here. This is what a resale certificate looks like. If you click on that form CDTFA 230, that'll take you to an online PDF, which you can fill out and submit, but to your vendor. You see it says, I hold valid seller's permit number. You're going to need to put in your seller's permit number. I am engaged in the business of, making hamburgers, or let's say, buying from, then you put your vendor's name. Number 4 is textbook language that says this is for resale. And then number 5, you're going to list the items you're buying. So this has to make sense. If you come to me and you're buying an item for resale, if you're buying soda straws, you run a restaurant, you're buying soda straws from me for resale, that makes sense. But if you run a restaurant and you're buying a vehicle from me, that doesn't really make sense. If I were to take that resale certificate, the people at my office could say, hey, that's not acceptable. You're responsible for that sales tax. So if you take resale certificates from your customers or you give them to your vendors, they need to be taken in good faith, all right? If you look at this resale certificate, there are a number of essential elements. Everything I just read off, plus a date and a signature. Technically, anything with those items on it is a resale certificate. So you could scroll it on a bar napkin and it would count. I would just print it off the website, but you will also see purchase orders. Most of that information belongs on a purchase order already. You just need to put for resale and put your seller's permit number on there, okay? There are penalties for misusing it. So my example of a restaurant guy trying to buy a vehicle, that would be a misdemeanor. Penalty is $500 or 10% per transaction, okay? For restaurants, when you buy raw foods, raw meats and veggies, baked goods, things like that, those are not taxable anyway. So you don't need to give a resale certificate if the item is not taxable to begin with. But if you're running a restaurant, mobile food truck, you're going to be selling carbonated beverages, alcohol, straws, paper, napkins, toothpicks that go with the meal, non-returnable to-go containers and disposable utensils. These are all things that you can purchase with a resale certificate. You're not necessarily selling straws to your customers, but it's assumed that the cost of the straws and the price of the soda anyway. So that's why you can purchase that with a resale certificate, okay? So food products and taxability can be kind of all over the map. So hot or cold food beverages sold for consumption at your place are taxable. Cold prepared food items to go are generally not. So you can think of it as like grocery store food, but not everything at a grocery store. That's generally not taxable. Raw fruits and veggies, meats, food requiring further processing by a customer. Cold food to go is also not taxable. So if I get a cold sandwich to go, that's not taxable. If I decide to eat that cold sandwich for here, it is taxable. And then hot food is almost always taxable, whether it's for here or to go. Right? Sales of food products are taxable when they are furnished, prepared, or served for consumption at facilities provided by the seller, sold at a drive-in, sold for consumption in a place where admission is charged. It is taxable when it is a hot prepared food product or some combination packages that also include cold food, okay? So these are all scenarios where tax is going to apply. So to expand a little bit more, if you provide facilities, that's going to be taxable food, even if it happens to be a cold food item. So generally having tables, chairs, and counters provided by the seller means you're providing facilities. It also includes trays, glasses, dishware. If you happen to be at a food court, like at a mall, where there are communal tables that may not necessarily be yours, that still counts as facilities. You're benefiting from the communal facilities available to all patrons of the food court, all right? So food served when you have facilities is going to be taxable for here. This also applies to drive-ins, establishment where parking spaces are primarily for immediate consumption of food and beverages. So, you know, sock hops, if we're going back to the 1950s, that's going to be taxable food if they're eating it in their car like that, okay? So here it is again. If it's consumed on the premises, combo meals, whether hot or cold, will be taxable. If it's sold to go, it's may be taxable or exempt, depending. This gets kind of complicated. Hot prepared food is taxable whether it's consumed on the premises or to go. Cold food and non-carbonated beverages are taxable for here. If you sell them to go, they wouldn't be taxable. We'll cover the 80-80 rule in a minute to help clarify some issues. And then carbonated and alcoholic beverages are always taxable, all right? If you're looking for a shortcut, it's hot for here or fizzy. Those are almost always taxable. That'll get you maybe 80% of the way in sorting out your point of sale systems, all right? Sales of hot food are always taxable, even if to go. It is food product heated above room temperature is considered hot food. And now there are some exceptions. So for instance, a hot cup of coffee to go or a hot baked item to go are exempt from tax when sold for a separate price. Okay, so hot baked items, hot beverages are non-taxable if they're to go. If this is making your head spin, then we do have the 80-80 rule, which can maybe simplify things a little bit. The way an 80-80 rule works is if 80% of everything you sell is food and 80% of that food is taxable, then you can make an election to just tax everything, all right? So if you think of a McDonald's, you can walk into a McDonald's and buy a Happy Meal toy. That's not food, but over 80% of everything they sell is food. And you can get a hot cup of coffee to go or a cold ice cream to go. Those aren't taxable, but over 80% of everything McDonald's sells are hamburgers, french fries, and sodas, which are always taxable. So that's why if you walk into a McDonald's, you may pay sales tax on a cup of coffee to go, where you may not at another McDonald's, right? The independent business owner gets to make the call. They elect under the 80-80 rule to just tax everything, okay? And This can apply to restaurants, bars, hotels, okay? If your food sales are greater than 80% and more than 80% of that is taxable, then that can apply. And taxes required when you meet the following criteria. So cold food and non-carbonated beverages are sold to go and are suitable for immediate consumption. So a business under the 80-80 rule would be taxing everything. They can make the election to keep track of their cold food sales separately if they want, okay? This would also apply to foods sold in a form not immediate consumption. So if you bought a take and bake pizza, those are generally not taxable. They would be under the 80-80 rule. It also applies to foods sold in a size not ordinarily consumed by one person. So that's a key qualifier. You can try to eat a quart of ice cream, but that doesn't mean it's taxable unless it's under the 80-80 rule. Okay. If you make the special election to keep track of your cold food separately, you have to account for sales of cold food and non-carbonated beverages and then claim those as exempt. So that becomes a record-keeping exercise. It's just a matter of how much time do you want to spend on QuickBooks at the end of the night, right? Before you get to go home. So this is part of a much bigger presentation that we give at the CDTFA, all right? And so since I'm nearing the end of my allotted time, I just want to direct you guys to our seminar page. So this is www.cdtfa.ca.gov/seminar. If you haven't gone there already, the first class you're going to want to take is Basic Sales and Use Tax. It'll explain in more detail just the basics of how it works and some of the exemptions available to you as a business owner. Then we have a tax return preparation class. If you want to file yourself, you don't want to pay an accountant, you can sign up for one of our tax return preparation classes. But I would encourage everyone to take the Basic Sales and Use Tax class first, and then go ahead and sign up for our longer form food industry class. Our next one is on February 16th, then February 25th and March 9th. Then there will be more in April, but that's for the next 2 weeks. If you want to register for the classes, you can do it at the link above, and we'll send you, they're all online, just like this. You'll be sitting at your computer and listening to us gab, and they're all free as well. So go ahead and sign up, take a Basic Sales and Use Tax class, and then we can dive more into the food industry, because taxes can hit caterers in special ways and mobile food trucks. So there's really a whole lot more for us to go through. You can see it's about an hour-and-a-half class when we're doing the full breakdown. So for a lot of you who need more specifics, I hope I whetted your appetite and we can get you to sign up for one of the bigger classes. And then finally, with COVID, I don't know if people here have seller's permits already, but those of you who have seller's permits, we're trying to offer relief during these times of intermittent shutdowns. But all of your tax returns that were due between December 15th to April 30th have been automatically extended 3 months, okay? So if you aren't going to get your your fourth quarter 2020 filed, that you can have up until the end of April to do that, and it won't be considered late. There's a 3-month relief of penalties and interest. If you happen to be over $1 million of tax, I don't know why you would be on this call, but you would still have to request an extension specially. Everyone else is automatic. And we are also offering interest-free payment plans of up to $50,000 of sales and use tax liability to help give you guys some more cash flow maneuverability. If you're interested in that, we have just go to our website, cdtfa.ca.gov, and we have a splash banner with all of this information regarding COVID-19, okay? And we will also go over that more if you go to one of our main classes, okay? So that's it for me for right now, as I think I'm coming up on 4 o'clock on the nose. Okay, I'll go ahead and call it. Thank you, everyone.
Thank you so much, James. A lot of valuable information there. And so, yep, we are right on schedule. So next up, we have Judy Fletcher, who is California Capital's Chief Lending Officer. So let me go ahead and bring up the PowerPoint.
Thank you, Sarah. And can you hear me okay?
Yes.
Great. Well, thank you, everybody, for participating, and James and Mark for that both incredible presentations, a lot of detailed information. I am going to be talking about how to fund your food-based business. So after you've done all the research and you have perhaps worked with Mark or James or their departments, received permits, and et cetera, you're going to be looking for funding. How do you support your business? So that's the presentation that I will be talking about. My name is Judy Fletcher, and I am the Chief Lending Officer at California Capital, and I oversee our micro lending programs primarily. What I'm going to talk about today, Sarah, if you could go ahead and yeah, change the slide. I'm going to talk about the possible sources of business funding, where you might find funds, what lenders look for in a loan, whether it's a traditional lender or an organization like California Capital. We consider ourselves a non-traditional lender. What is generally included in a loan application, including the importance of a business plan and cash flow projections, and then just quickly review some of our loan programs. I will not be talking about disaster grants and loans at this point. Next slide, please. So where do you get money? Well, obviously, funds can come from a variety of sources. One might be your savings account. Another could be money given or loaned to you by family or friends. Again, maybe you have an investor who is willing to put money into your new business venture. That's called equity financing, and they typically will require an ownership share of your business. There's also funds that you can get that you borrow personally. So if you own your home, you might be able to get access to a home equity line of credit or a credit card with some really good terms. Or you may need to borrow funds. And you would get these funds obviously through either a bank or a credit union, what we would call a traditional lending source. Or you would get a microloan or other type of loan from a non-traditional lender like California Capital. Again, we do talk about disaster loans, but since this is about starting your business, I'm not going to be covering disaster loans at this point. Next slide, please. So what do lenders look for when you go to apply for a loan? Let's say you have your savings, you have some money, but you really do need to find other kinds of financing. So you're going to request a loan. Well, there are what are called the 5 C's of credit: character, capacity or cash flow, collateral, capital, and condition. And I'm going to go through each of these very quickly. So the next slide, I talk about character. So what character means to a lender, whether it's a bank or a non-traditional lender, is what, as a business owner, do you know about your business? What is your experience in managing and operating a business like the one you are starting? And what type of credit do you have? The credit obviously demonstrates your willingness to repay the loan. So if you are starting a business and you've never run a food cart or a food truck, but you've worked in a restaurant for many years, then you want to emphasize that experience to a lender. And that will be to your credit. In terms of credit, FICO is a credit score that's calculated from information in your credit report. And basically a lender is going to be looking at what's the balance on your account, what's your payment history, do you have a track of good payment history, what's your credit score, And then if you have late payments and some collection accounts, even if you've had a prior bankruptcy, that doesn't necessarily mean you will not get a loan. In other words, you have to explain those kinds of items on your credit report and to a lender. Basically, again, the credit does provide a pretty good indication to how likely you'll be able to repay your debt. The other C is capacity and cash flow. And this means, what's the financial strength of your business? If you're an existing business, and let's just say you're expanding and you're going to add a food cart, or you have a restaurant, you want to be able to attend farmers markets or things like that, we're going to look at what your cash flow is, meaning, is there income after your operating expenses like lease payments and wage expenses and cost of food, utilities, all of that, and any other debts you have to repay the new loan. So what is your ability based on your net profit to repay your loan? The next C is collateral. What this means is, what does the lender have to take as security for your loan? And it can be something that you buy with the money from the loan, like maybe the food truck or maybe your food trailer. That would be security for your loan that the lender will take in case, for whatever reason, you're unable to make your loan payments and you default on your loan. So that's collateral. The other part of collateral is that most lenders always require that any business owner with 20% or more ownership personally guarantee the loan, which is basically means that any owner with more than 20% is promising to repay the loan even if the business fails. The next C is capital or contribution. In other words, what is the investment that you as a business owner or entrepreneur are putting towards your business? And basically it would be an injection or a down payment. And what this emphasizes is, what is your skin in the game? Typically with a startup business, lenders are looking for at least 10 to 20% of funds coming from you as a business owner putting towards your project. And then the final C would be the condition of the loan. Lenders look at what the loan amount is, what the interest rate is going to be, interest rate meaning the cost of the funds to you, what you'll use the loan for, and basically how well your business is doing, how well your business industry is doing. Many lenders, traditional lenders, banks in particular, are very hesitant to lend to restaurants right now. And unfortunately, restaurants have been hit very hard by the pandemic. So there are two strikes with traditional lenders. One, in the food industry, they're very hesitant to lend in the food industry. And secondly, many lenders will not loan to businesses that are less than 2 years old or are startups. So those are the conditions that lenders look at as well. So how to get a loan? I want to talk about credit reports just for a minute. When a lender asks for a credit report, you can provide a lender with one at no cost from these two sources, annualcreditreport.com or creditkarma.com. And these are at no cost to you. So you want to make sure when you go to a lender, you know what's on your credit report. And there's some things that can be fixed. And you want to, if you find any mistakes, you want to correct them right away. If the report is correct, but there are some late payments and negative conditions on that credit report, you want to start working on reducing the amount of the debt you owe, or working with a credit repair agency to help you beef up your credit score. Next slide, please. So how do you prepare to ask for a loan? And this is really important. Let's go on to the next slide. The first thing you want to do is make sure you are very well prepared, that you have a thought out and written plan for the steps that you're going to take to get started in your enterprise. And I'll talk about a little bit about business plans in a moment. But that means, have you done the work that Mark and James have talked about? Have you done your research in terms of starting a food truck or a food cart and what you want to do, or your catering business? And then you want to be able to tell your story well. You want to help your lender get excited about your dream and believe in what you will do, and that you will be a success. And then you also want to be very honest in your presentation of yourself. If you know there are issues with your credit, you've had a previous bankruptcy, we as lenders will find out, because we'll run our own credit report on you or your business. And so we will find out about these things, but it's better if you tell us up front. So next slide, please. So the basics of your loan request. You need to be very clear about how much money you need and how you will use that money. So will you be buying something? In other words, will you be buying your food cart? Will you be buying a truck, food truck? Or do you already have one, and what you need is to purchase inventory, supplies, food, all those items that Mark talked about? Or will you need money for working capital, like utilities and salaries and so on? So be very clear about that. There's always a red flag. We always raise a red flag when a borrower says to us, well, I don't know, what's the highest loan amount I can get? You know, or how much are you lending? Well, that tells me that they haven't thought through exactly what it is that they need. So next slide, please. So for a startup business or a business less than 2 years old, we need to see, or any lender will need to see, a business plan that would include your resume. So in other words, that tells us what your management experience is. SBA has resources, and California Capital has a Dream Builder, Dream Builder process that Sarah talked about. We also want to see 2 years projections that are prepared on a month-to-month basis, along with how you came up with those projections. California Capital has business counselors who can help you with preparing those projections. And then we need a letter of explanation regarding the amount of the loan request that you are asking for and the use of funds. And those can be included in the business plan. Again, very important part of this whole process. The business plan tells a lender that you've thought through the business, basically why the business, why you want to do it, and why you as a owner. If you are an existing business and you're looking to expand, you're looking to add on a food truck or looking to add on a trailer or so on, we're going to want to see your historical financials. In other words, copies of your complete business tax return. And I say 1 to 3 years because that depends on what funding source you might be using. We want to see a year-to-date balance sheet, a year-to-date profit and loss statement. If you have debt, we just need to see what that debt is and how much you're paying towards it, and of course your resume. And then we want to see a letter of explanation regarding the amount of the loan request, how you're going to use the funds, and if you've been operating during COVID, how has COVID impacted your business operations? And if you're planning to expand or you've suffered a loss during this whole pandemic period, then we want to see at least a year of projections. How do you plan to operate your business for the next year forward? And what these will provide to us is show us ability to show us how you plan to repay your loan. For any individual with 20% or more ownership in the business, then we also need to see your personal financial statement. We need to get a copy of your personal tax returns, current pay stub, and a copy of your credit report. And again, you can request those credit reports from annualcreditreport.com or Credit Karma. And we'll ask for those credit reports before we run our own, because we don't want to run a credit report and have that show up on your credit report and lower your score before we're ready to commit. We can provide you with some of these forms, of course, a personal financial statement and a debt schedule, things like that. So next slide, please. So your business plan, this is one of the most critical documents in your loan application. And again, we have business counselors at California Capital that can help you put together a business plan. there are other resources through the SBA, like Small Business Development Center. Those folks can help as well. But this business plan serves as your action plan. So it's a process that is usually very, very helpful for business owners to go through in terms of thinking about how you plan to operate, organize your business. It'll identify your target market. Who are you targeting? What area are you targeting in? What will your capital needs be? How you plan to make money? How are you going to charge folks? What's your revenue going to be? What are your expenses, including the taxes, for example, that James talked about? And then it tells a story of your business. Again, why the business, why you want to do this, and why you. In terms of projections, cash flow projections, this is the estimate of the money that you anticipate coming in, your revenue or your income, and then the money going out of your business. In other words, your operating expenses, the expenses that you'll have to pay for employees or food or any other items that you might need to run your food cart or food truck or catering business. And the projection should reflect how the loan will impact the business. In other words, what will the loan pay for? And these projections should be reasonable and include explanations. How did you come up with your income? How do you anticipate making that income? What's it based off of? If you're a kettle corn company, for example, and you're gonna sell, 10 bags of kettle corn an hour, what's the cost of those 10 bags and how many hours will you operate and what will that income be on a per day or per month basis? We're looking for that kind of detail. And then obviously the projections need to reflect industry data to make sure that they make sense. And again, California Capital has great business counselors who can help you figure this out. One thing we're looking for is that as you start up your business, you're going to see a trajectory where your income will hopefully go up month to month. What you earn on month 1 is not going to be the same as what you earn in month 12. So income should not be the same every single month as you're ramping up your business. So why might you be declined for a loan? And I don't mean to be a Debbie Downer here, but I just want to point out why a lender may decline your loan requests. And it could be for a number of reasons. Number one, as I mentioned before, management industry experience is very important, especially for a startup business. So it could be for a lack of experience. It could be for poor credit. Many lenders have a minimum credit score. We at California Capital do not. We want to hear more of what your story is. But if there are too many late payments, too many collection accounts, you've had several bankruptcies, well, that sort of raises a red flag. There could be insufficient cash flow. In other words, when we look at your revenue minus your expenses and debt, and there's a negative number there, you're operating in the red, you obviously don't have enough income or net profit to repay your loan. So we're looking for repayment ability. Lack of equity. In other words, maybe you have no cash or no family or friends that might help you put money into the business. That could be a reason for a decline. Or again, insufficient collateral. There's no way that a lender can collateralize its loan, secure its loan. And if not a declining reason, a credit score will be one factor in determining what interest rate to charge. In other words, if the lower your credit score, the higher the interest rate might be. Let's skip the next couple slides, Sarah. And let's go to our lending programs. I'm just going to briefly tell you because I know I have just about a minute left. We have several micro loan programs at California Capital. One that goes anywhere between $500 to $20,000, and those are for new and existing businesses. We have a revolving loan fund where we can provide loans up to $150,000. That program is specifically for new and existing businesses located in 5 counties: Sacramento, Yolo, Nevada, El Dorado, and Placer counties. And funds for these programs are basically dependent on the availability of funds, and that fluctuates over time. California Capital also has been working with on the state loan guarantee program. We guarantee loans that come from banks, so from a traditional lender. And many startup businesses won't be qualified to get a loan from a traditional lender, so this program may or may not apply to you. So Sarah, I sent you a picture of some of a food industry that we supported with one of our loans this year. This is a company that is a kettle corn company, and they went through the whole process of receiving permits and manufacturing a food trailer that we funded back in the late spring and early summer. And if you do have that picture available, Sarah, I wanted to show everybody a picture of it because it would apply to what many of you are here today to learn about.
Yes, I pulled it up on the screen.
Okay. Oh, unfortunately, I don't see it, but that's okay. So this is this is what the food truck looks like from California Gold Kettle Corn, and they had it manufactured up by a company in Oregon, and they went through the lending process with us, and they were able to qualify for a loan in the amount of about $67,000, and it helped to pay for the trailer, helped to pay for a lot of the equipment that they needed to run their kettle corn company, and to pay for permitting and items like that. So we're very proud of that business, and it was something that California Capital could help to finance. So the last slide that I had were just some other businesses that we've supported, but I think my time is up. So this is contact information for our lending program. If you're interested in pursuing a loan, then I suggest that you go to the website link that's here and click here to get started, and we'll see what we can do for you and with you.
Awesome. Thank you so much, Judy, for that presentation. So we have about 8 minutes left, so I will hand the floor to Sui regarding the Q&A and chat. And if you would like to stick around for the next 8 minutes, please do so.
Thanks, Sarah. Thank you, James, Mark, and Judy for the really informative presentation. And there were a lot of questions posted in the chat box as well as the Q&A. And the presenters took the time to answer most of the questions, if not all of the questions. And we hope that if you had taken the time, some time, or in the next few minutes or so, and look for the response to your questions. And if you feel that your question has not been adequately answered and you have follow-up questions, by all means, I think at this point, raise your hands. And what we're gonna do is after the webinar, we're gonna copy all the questions as well as the response and put them, organize them in a Word document, and we will send it out to the attendees as well as the presentation slide. And with that, I am gonna, Teresa, you have a question, and I know that you asked some questions in the chat box as well. So go ahead and unmute your mic if you have a question.
I did, and Mark already answered part of it, but I do have more questions about that. Regarding one of the slides that he had, it was a list of non-potential hazardous food. Is that a complete list from the state, or is there more items on that list, should be on that list?
That what I think is just a shortened list. The state should have a list of the approved cottage food products on their website. So I can try to find that and post it quickly, or I will be able to send it to, or you can contact me directly and I can email it to you.
Okay.
I'll find it in the next few minutes.
Thank you. And then my other second question to you, Mark, is on the requirements, there is a website that you sent to me to get that. Now, is there a certificate program for all of those requirements that we should get a certificate for the facilities, or is it just something we just have to comply and get approval from the department?
And this is related to cottage food again?
No, just in general for all of those food truck or food cart or anything.
Oh, well, yeah. So it may depend on what foods that are being prepped, but any employees on a food truck or food cart do need a food handler's card. And then for food trucks, there is a required food manager certification, like a ServSafe. That's an accredited, approved testing site. And so those are usually proctored tests for the food manager certification. But yeah, so if there are other questions, feel free to contact me.
Okay, thank you, Mark.
You're welcome.
And next we have Tonatsin. I'm sorry if I butchered your name. Macias. If you have a question, feel free to go ahead and post it.
Yeah, I guess it's just a clarification. If let's say you want to sell to, I wonder if it's a whole food sale. If you want to sell, for example, to like Trader Joe's, if you would need a wholesale permit.
Yes, so I didn't get involved. Yeah, so if you are like the middle person, or if you're selling it to a company or a retailer that will sell it to the customer, then you are a wholesaler. Then you do need a registration through the state. It's State Department of Public Health, and it's called a Processed Food Registration, or PFR.
Processed food. Thank you so much.
You're welcome.
And before we get to Anya, there is a question for the lending team. Can I hope to get a loan even though I've never had a credit card to build credit? Judy, would you like to take that question?
Sure. So have you looked to see if you have any credit score at all? Or have you had any other loans or any of those kinds of things that might be on a credit report? If not, that does not mean that you could not get a loan. We would probably look at other factors in terms of your experience, your management experience, how strong are your projections, what's your ability to repay the loan.
Thank you. Anya, would you like to go ahead and ask a question? We don't see your mic.
Okay, thank you. Are you able to hear me now?
Yes.
Thank you so much. My question is also for Mark regarding the cottage food operations license. Do you happen to know if it's different for each city? I happen to live in Elk Grove, and I've been trying to get this process done for almost a year, and I just keep getting different information on where to go and who issues what.
Oh, wow.
Do you happen?
Yeah, all food permits in Sacramento County are issued through our department, through the County Environmental Health Department or Environmental Management. The cities may get involved with cottage food possibly for a home business. But yeah, so you may need a business license or a peddler's license or a home-based business, some sort of license with the city of Elk Grove. But our department is the only one that will issue or can issue the cottage food registration. So definitely you would contact us or go to our website, because I think it is a online type of registration.
Yes, I do see the form online here. Thank you so much.
All right, you're welcome, Anya.
We're gonna take one more question, and it's from Ivory. Is there a state license for produce sales, and is the food handler certificate, manager certificate needed for produce?
Produce sales, I mean, if you're just directly selling to the customer, you may need, it depends if you grow it or if you're purchasing it from a wholesaler and then selling it again. There may be a few different licenses you need. For produce sales directly to the customer, you may need a permit with us. It's a mobile food permit if you want to sell it off of a vehicle. But if you're doing more of a large scale and you're trying to maybe wholesale or move produce to different markets or retailers, then that becomes a state license through the California Department of Food and Ag. And you may also need, and also there's a local county ag commissioner or ag department, and they do also issue some licenses related to produce sales. They get more involved with like the weights and quality and packaging and that sort of thing. But feel free to contact me for more information.
Okay, great. We're heading 4:30. So we want to thank everybody for taking the time. It's a long, an hour and a half presentation, but we hope that you found it informative. We're going to be sending out the information, and if you don't feel that your question has been answered, feel free to reach out to us, and we'll direct you to the right person to address to your concerns. And with that, thank you very much, everybody, and we'll see you in our next webinar.
Thank you.
All right, thank you, everybody.